So US stocks took a nosedive on Wednesday with the Dow Jones plummeting around 700 points to 39,669. The S&P 500 dropped 121 points to 5,276 and the Nasdaq Composite Index falling 516 points to 16,307. NVIDIA's warning about $5.5 billion hit in charges due to the new US curbs on chip exports to China did not help, with shares falling 6.9%. Further, US Federal Reserve Chair Jerome Powell's comments on slowing economic growth and higher inflation due to tariffs also spooked investors.
Today's news, obviously, with some of the tariffs around some tech names and some basically reducing some trade around some semiconductor names, I think is what really we're seeing from a market reaction. We think you're going to continue to see tech on the downdraft just because a lot of this tariff noise is going to affect them specifically, because now we're focused on China. Before, when it was a worldwide tariff issue, there's a lot of companies that had some kind of skin in the game, if you will. With China, a lot of it's tech. And so I think a lot of the tech money is going to be pulling out, going to other places.
And talking of the Indian benchmark equity indices, well, they have rebounded sharply in afternoon trade on Thursday, with the Sensex rallying around 1,400 points and Nifty near the 23,800 mark when reports last came in. This is a strong intraday recovery. The Indian rupee strengthened for the fourth straight session, appreciating 10 paise to 85 rupees 54 paise against the US dollar in early trade. This was supported by foreign capital inflows and a soft greenback globally. Talking of other Asian markets, shares in Tokyo rose more than 1%, with Hong Kong, Singapore, Shanghai, Sydney, Seoul, Wellington, Jakarta also up, though Taipei and Bangkok edged down. And Avinash Gorakshkar, share market expert, joins us on the show now. Thank you, sir, for being part of the show. Well, US stock markets saw huge losses after President Trump imposed tariffs on numerous countries on April 2nd. But after Trump announced a 90-day pause on reciprocal tariffs, US stocks soared and they remain volatile. Could you break down what is happening in the US stock markets?
Yeah, I think, first of all, good afternoon. I think clearly the US markets is witnessing a lot of volatility because clearly post April 2nd, when the President Donald Trump announced tariffs, these tariffs were significantly much higher than what the street expected. And I think this was imposed on many countries, including China, which now just recently has been imposed a tariff of almost 245%. I think clearly the US markets have been volatile because a lot of imports happen from China and from the European countries. So typically, whenever tariffs go up, the prices of these products will obviously go up, inflation will increase. And I think recently Mr. Powell, who's the Fed governor, chairman, he clearly mentioned that unless inflation comes down, interest rates are going to not going to come down in a hurry. So that has also made a little bit of uncomfortableness for the US markets. In fact, yesterday we saw a sell-off on the Nasdaq. NVIDIA, which makes semiconductor chips, was down by almost 7% because they have been now told that they cannot export their chips to China. So I think China has been a very big customer for them. So I think across the board, we saw a sell-off on the tech side yesterday. So I think there's a lot of uncertainty in the markets, and unless the markets get some clarity as to how the tariffs would come out finally, I think you're going to see the markets there going to be quite volatile. Because clearly, I think, for the next 1 or 2 quarters, most of the corporates there and obviously the US citizens will be watching very closely as to how this tariff issue finally gets resolved. Because obviously, if it doesn't get resolved, then I think the US economy may in fact see a demand contraction and move into a recession also. So I think markets will be volatile for some more time.
Okay, Avinash, what does the volatility in the US stock markets amid tariff fears mean for individual investors, US companies looking to raise capital and the US economy at large? Will US companies manufacture more in the US instead of overseas as a result?
See, I think in the short term, it's very unlikely that US companies will manufacture anything in the country because, manufacturing is a very long process. if tariff rates change dramatically, then I think, even fresh investments will take some time. But I think US companies will have to work out some deals with European or maybe Indian companies because, to manufacture in US, the biggest challenge is the labor cost. Labor cost is increasingly expensive, and in some sectors like textiles, for example, the amount of labor required to manufacture, textile is also humongously very large, which is not possible in a country like US. So net, I think, trade deals will have to be worked out, negotiations will have to be worked out. But at least for the next couple of years, it's very difficult to believe that US will make everything in-house. It's a long process and it may take a long time for that to happen.
Can we expect US markets to stabilize and rally anytime soon, or are US stocks in for a period of weakness or volatility at least for a few months till the tariffs issue is sorted out?
No, I think markets will take some time to stabilize because clearly, I think the economy is in a very precarious position. They've got a record debt position in terms of the government debt. And most importantly, once the tariff issues came up, what happened was a lot of international investors, a lot of countries who had invested in US bonds started selling them. So Mr. Trump had to do something to, do a little bit of damage control, and that is why he gave a 90-day pause. Hopefully, if the tariffs are brought down to reasonable levels, if we probably get a tariff of say 12-13% from 26%, I'm talking for India, I think then only one could see a resumption of good recovery for the US market because US is an import-dependent country. So I think at least for the next couple of quarters till September, you can expect the markets to remain volatile. Only after that, some stability could come in.
And what about US semiconductor companies? How are their fortunes going to be affected by the tariffs? Will they likely manufacture more in the US as a result of these tariffs?
No, I think, definitely they would think of making the semiconductor chips in the US, but I think it's a long drawn process. My sense is that, companies which are already making chips, I think somebody like NVIDIA has been clearly told that not to export to China. So probably what would happen is they would look at other possible markets where they could export their products. But I think, yes, the focus of the Trump administration is to ensure that more semiconductor production happens in the US rather than importing them.
And turning to domestic stock markets, Avinash, after the initial huge fall, the key stock indices, the Sensex and the Nifty have recovered much of the ground they'd lost after the US imposed tariffs, yet the market remain volatile. Where is it likely to go from here, and what will it take for the stock markets to rally once again?
No, I think my sense is that, now the markets here are rejoicing because clearly the U-turn which Mr. Donald Trump made by announcing a 90-day pause clearly indicates that the initial effort was just to get all the trading partners, most of the global trading partners on the table to negotiate. So I think we are a protected market, and fortunately, most of the European countries, the US, companies are looking at India as a very strong consumption-driven market. And I think obviously there's a large kind of potential here for those companies. So typically that is one of the reasons. Plus on the currency side, the dollar has become weak. The rupee has stabilized. The dollar index has come down. And we have been seeing a lot of FI buying happening now slowly on the cash market side. So I think all this has made investors here confident that the panic is out of the market. And I think maybe in the next 3 to 6 months, probably we could see a good recovery. I think the jump in the markets has been largely because of the currency stabilizing and of course FI liquidity coming back. And of course, corporate results have been slightly better than what the street expected. So, all these factors have made the market slightly positive. But I think we could consolidate, at around 24,000 odd levels. The market is definitely looking forward for better numbers, from the April to June quarter. So I think on correction, it's a good opportunity to accumulate quality stocks.
Okay. Can we expect India to quickly sort out the tariffs issue with the US more quickly perhaps than many other countries? What is your view?
No, I think, we were the first country to visit Trump after he got elected. Mr. Modi had a very fruitful discussion with him. And I think my sense is that very soon by, say, August or September, we could get a proper free trade policy, announced. And that is definitely going to be a big positive. I think unlike, countries like China, Mexico, Canada, which are largely export-oriented economies, India, fortunately, is not export-dependent. We have a large domestic market. So I'm looking forward. I think we could get some positive news in the second quarter of this financial year.
Thank you very much, Avinash Gorakshkar, for sharing your valuable insights on the global markets, global economy, and of course, Indian prospects. Thank you very much for being with us.